Hello and welcome to the podcast. I'm Katharine Morton, Head of Trade, Treasury and Risk at TXF, and I'm very pleased to join this discussion today, which is hosted by Mitigram on trade finance digitalisation in a post-Brexit world. And I'm joined in the UK today by what's been described to me as the Mitigram dream team. So we have Joshua Cohen, who's MD of Mitigram, and he leads the financial institutions business. I've got John Treasure, who's Sales Director UK, and Bedi, who is Sales Director UK as well. And we're going to be discussing trade digitalisation in a post-Brexit environment. And we're about building trade resilience post-Brexit. So one of the biggest themes that needs to be talked about is how to build resilience through digitalisation. So let's look at the baseline and where we're at now, and how resilient are you actually seeing trade in the UK now that we've left the EU? We've just had figures out from April, the total trade deficit's narrowed. But from where you're sitting, where do you feel we are now, and how's digitalisation going to help make things better? I'll bring Pepi in first on that one.
Yeah, gosh, yeah, nice to have an easy question to go into it. I think we shouldn't get too carried away. Brexit was something that we've been planning for quite some time. And the numbers that you quote, we've seen, I think the numbers yesterday showed a 47% drop from the food and drink industry in regards to UK exports. However, putting that into context year on year, you've got to take into account we've gone through the pandemic, which most of the world has done. We had an initial impact on stockpiling because of people's concerns of the impact of Brexit rules. And then obviously we've had the actual impact of Brexit. So we've entered some uncharted waters for UK. But I think what we've seen in the most recent figures from the CBI is that there is a resilience in the UK industry. Now, obviously, you're absolutely spot on. This is the time to build a digital resilience and future-proof businesses. I think a lot of the manufacturing industry understand that. And going forward, the numbers that we've spoken about will gradually come back. An example will be, for example, the fish sales that go to Spain, because of the new regulations, something that previously took 12 hours to transport from Scotland to Spain was now taking 2 or 3 days. And I'm sure the Spanish don't appreciate their langoustines to be quite so off. However, people are now adjusting to that new paperwork. And I think it'll be pleasant numbers that we see second quarter, third quarter. But then that goes hand in hand with the digital processes, because people are moving away from paper anyway.
Now we see sort of threats of fragmentation in banking and capital markets, and a particularly a challenge for corporates, both to imports and exports. John, maybe you can pick up on the baseline where you see digitalisation at the moment.
Yeah, I mean, I think it's incredibly important because information and data is the name of the game at the moment. Companies, exporters and service companies need fast and precise information, and the Mitigram offering stores all data. It gives you superb analytics and reporting at the touch of a button instantaneously, as long as everybody fulfills their obligations and fills it in correctly, because data has to be picked up and it has to be analysed. And of course, with the systems we've got, people will be able to make faster and quicker decisions based on recent history and recent transactions that they've completed. I mean, on top of that, I can see it growing because the recent market surveys have shown, record growth, both in services and manufacturing. So at the end of the day, you're going to have quick reporting, quick management information, and quick capacity to make decisions based on up-to-date information. And I think that's essential for all businesses these days: speed, data, and information. Perfect.
Thank you, Joshua. Maybe you can sort of again bring us just on the baseline level of where we're at now, and where you think digitalisation is going to help make things better.
I suppose the main point with digitalisation is very much along the lines that John was talking about. It delivers efficiency, and those efficiencies tend to offer the opportunity to offset some of the other inefficiencies, especially you think about Brexit. Now, Pepi mentioned, this sort of adjustment period, and that's bound to happen. An adjustment period is going to be probably about a year. And in the meantime, the UK government's running around trying to sign trade agreements. I think the Australian one was just done a little bit earlier on this week. There'll probably be a lot more to follow now that they've set out the first one. And that will help also sort of bed down the new normal for the way the UK interacts, not just with Europe, but the rest of the world. There's bound to be some substitution for European imports, but we're not quite sure where they're coming from yet. But going back to how does the sort of technology help us adjust, and how does technology compensate? It really is in technology can deliver efficiencies, whether that's efficiencies in workflow, whether it's efficiencies in getting different systems to talk to each other, and I think we'll probably talk about that a little bit later on, or whether it's efficiencies in making us make the right decisions, or helping us make the right decisions, which alludes to what John was saying about having the right analytics. And that's really why, for Mitigram, we set out to deliver some of these efficiencies, especially on workflow, especially on being able to see the data, to understand the data, and to act more smart against the data.
Right, you're all dealing with FIs in Europe. I mean, to your point, I guess I saw a recent report from Deloitte and IHS Markit saying about fragmentation of European capital markets due to Brexit, and that's increasing operating costs for banks to the point where some are struggling to make the UK and EU trade hubs viable. How is interoperability going to help if there's rationalisation in the European banking sector, for instance? And what about sort of the UK post-Brexit? Maybe stay with you, Joshua, on that one.
So I think rationalisation in Europe is going to continue. We've always had a lot of large national banks in each country, and unnecessarily so, I would suggest. Interestingly, a few years ago, the UK government decided that it was going to hand out a lot of challenger bank licenses. I'm not convinced of the efficacy of that, and whether that was the smartest thing to do, but I think it was a reaction to what had happened in the global financial crisis. Look, the impact of regulations is always a challenge for banks. Again, it's an adjustment thing, and the increased capital for trade has come in possibly in two ways. For offsetting commodity risks to go into the futures options markets or some of the other risk markets, the need to transact with centralized counterparties, the CCPs, as opposed to over-the-counter transactions, has sort of driven up costs from a capital perspective. But I think for trade, it's been much more Basel III, which came in some time back now, where the adjustments for capital required to support risk-weighted assets was aligned very much to standard lending processes, and didn't take account of some of the benefits that trade has. The adage that trade gets paid was largely ignored by the regulator, and it was something that I personally was fighting quite hard against, and wrote papers to the Basel Committee at the time.
Yeah, maybe Pepi coming in on again on the sort of like the FI side at all. What are you seeing in terms of rationalisation post and the shadow of Basel III as well?
Well, we'll go to the shadow of Basel III a little bit, because as Joshua said, it's been around for quite some time. But what we've seen in the last 2 years is of quite a few of the European banks moving out of London. Now, that's caused a knock-on effect into operating costs for those EU banks. And then we've also seen some various legislation brought in, say, for example, in the credit derivatives market, that's forced some business out of London and into EU zones, stroke probably more New York, given their capabilities. So how long does that last for would be the question, probably, because what we do know is that we have a strong group of people who live and work in the UK in the financial services sector. Is that replaceable within the EU zone? Well, we're probably already seeing, as the EU banks' profitability numbers are quite a way down, measured against the increased operating costs, that my belief would be that within a year, 2 years, we'll see London even stronger than before. Those banks will start to reopen. Is that quite a leap? I don't think so. I believe quite strongly that London is a robust financial centre with an incredible number of people living, working in that environment. And can that be duplicated elsewhere? Well, you're talking about 200 odd years of history. That's quite a number to have to go into and reproduce.
That's interesting. I mean, maybe I should move to sort of standardisation and legal and regulatory requirements, because obviously London as a hub on the basis of English law. So, I mean, but on a global basis, there are lots of digital platforms emerging, whether that's sort of AI influence or straightforward workload conversion. There's an awful lot of different platforms everywhere. Do you think that there's going to be some sort of legal or regulatory framework not say standardization, but baseline? And what legal concepts do you think are going to govern global usage? I mean, is it English law that's going to be the fundamental basis for all of this? And is that then going to support London, the UK, etc.?
Do you mind if I take that one?
Please.
Okay. I think firstly, this has been looked at before. So the World Economic Forum had a white paper they released back in 2017. So this is not a new subject matter. This is something that has always been looked at. It's not the only vehicle there. We've got correspondent banking networks with local and regional banks. They're an important channel for international trade finance. Now, as you rightly point out, what can be the overarching legal and regulatory environment? Joshua may mention previously on the Basel III Accord, and we know full well the sort of macro-prudential regulation that sometimes doesn't fit trade finance so well. So that becomes the problem where trade finance fits in there. Yes, there will be requirements of institutions to reconcile their balance sheets with those regulations, but that's already been underway. That's not new again. Where they go forward with it today is, I think, a huge amount of how much more they adopt into that digital process. That's the only way of going forward. That's the only way of them reconciling their overall balance sheets and then reconciling that with the business activities they're involved in. Don't forget, for banks, trade finance is only one small cog there. So what we have to demonstrate within that digital process is how much more information can be gleaned. And I think John might allude to it again, but he spoke about it briefly before. The analytics that are so important now going forward, not just for banks to understand their business, but also in demonstrable aspects to the regulatory authorities that they actually understand their business. And we've seen in the past that banks have not been good in showing that information.
So, John, maybe if you can take that on on the AI perspective and sort of the analytics and the data.
Well, I mean, I've got two comments to make. I mean, tight and clear regulation is really important. I mean, especially in digitalisation, if we're going to start sending documents of title and financial obligations through the digitalisation process, unless it's absolutely watertight, well regulated, authentic, there's going to be massive scope for fraud if we're not careful. And we've already seen, Green Hills recently with people inventing, potentially, allegedly inventing invoices. So it's really important that there is sound and watertight regulation to stop a race to the bottom in an attempt to keep costs down. That's number one. And number two, on the law side, I think English law has been perfect. I mean, it's slightly moved away from that because of the EU regulation, but English law is completely different to most laws in the world. It's got experience in commercial aspects with its commercial course, it's presidential run, and in fact, in terms of the outcome, English law decides not only on the facts in front of it, but it decides in commercial terms of what is supposed to happen as well. And that, of course, is very unusual in a legal situation. So those are the two comments I would make, and I think it's absolutely important that there is regulation. I mean, even in letters of credit, you have uniform customs and practices, but it's not on the statute. It's just a guide. So we have to be very careful about the application of regulation and where it breaks the law and where it doesn't.
I would sort of pick up a little bit on that. It was many years ago when I was studying contract law, but one of the fundamental tenets of English law is its neutrality. There's no need subsequently to prove inferior or superior knowledge to bring the contractual details to bear in a court of law. Now, when you look at a lot of the other European legal systems, that ambiguity is always there throughout the term of a contract. So I don't see one of the other established legal frameworks taking over. Whether something in the next 50 years develops based on that sort of theory of neutrality and then becomes an international legal standard, that's a possibility. But I see that as being a long way off. And in a way, it's like if it ain't broken, why fix it?
Absolutely.
I would just add on that, Joshua, that do you not think part of the problem we had with Basel III was that there wasn't enough inclusive regulatory dialogue that then would foster clearer standards for everybody at an international level. Basel III sort of came in, and then suddenly we looked over our shoulders and went, hang on, this hasn't taken into account the fungible asset aspect of commodity trade finance.
Yeah, I think Basel III was hugely complicated, and it raised the bar in terms of financial institutions' knowledge. Financial institutions executives had to suddenly take into account a whole load of things they never took into account before when they measured the amount of capital they needed to support their businesses. Operational risk, reputational risk, all this came in. And you think about legal structures supporting contracts, if it's a less appropriate legal framework, then the capital goes up. So why would you want to introduce another legal framework which possibly introduces unknown risks and therefore more capital to support the business?
Interesting. I mean, I'm looking at developments like the MLETR model laws and things like that, which actually have the ability to allow us English law to operate under the template. So in terms of trade digitalisation going forward, that there is some sort of hope for standardisation underneath the an umbrella of interoperability. So
and there's still a lot of catch up to be done. We talk about trade digitization, and there are a number of digital startups that are trying to digitize the documents, but of course the legal frameworks are trying to catch up, and they're still some way behind. I think maybe Singapore is of the sort of most developed nations. It's one of the most developed also in terms of its acceptance of digital documentation and the ability to use digital documents to instead of wet inked documents. But I still think we have some way to go there even before it becomes common practice to use these digital documents.
I mean, just going down to the sort of the business level. I mean, do you think that there's still a reluctance of business to grasp digitization, or is it just trade finance that's operating from this sort of fairly low bar, and maybe open the discussion a little bit more and talk about sort of where Mitigram's TXM sits in a bank or a company's tech stack. I mean, we can talk about the sort of things that you're looking to do to actually improve digitalization for trade finance specifically.
I think I'll just jump in there if I may, Katharine. I mean, I think going back for experienced people. There has been a resistance for digitisation and the application of IT, because generally, from my history 20 years ago, all that happened is it was a mess. Information technology departments put in new systems. There was no cross-fertilisation of knowledge between the users and the IT people. They gave you what they thought you needed, and it was hopeless in the end, and usually a waste of time. And there are a few people around now that still have resistance to that based on the history of failed IT systems. Of course, the world has moved on, and I see now with systems like Mitigram, it's absolutely superb in what it does. I wish I'd had it, 10 years ago, because the amount of data it collates, the amount of time saving it makes, the amount of information from the analytics you can get is absolutely imperatively important for correct management decision and information. But basically there is a bit of resistance, I think, from people who are probably at the top now making decisions on the history of IT and information technology and AI applications, because there's a little bit of shall we say worry about the cost and whether it will actually work or not. And Mitigram has proved in its time that it's been running that all this works perfectly well now.
How are networks slotting together globally, and how can you avoid digital islands and silos, with particularly from your perspective?
First,
Yes.
read the resistance to change. That's just a natural human knee-jerk reaction, isn't it?
Yes.
But gradually, if you look today, the power of your mobile phone in your hand compared to the computer systems we had 20 years ago, and the size of rooms with all those servers in, is quite incredible, that leap already. But on the interoperability aspect, going back to your previous question, Katharine, we're going to have some sort of regulatory framework or collaboration that ensures there's a harmony of those platforms. We've already got quite a lot out there. One thing that's always amazed me in the last 20 years is something like Bolero, that seems to be something. Why doesn't everybody just use it? There's your bill of lading document digitized already, and we're still talking about whether people should or shouldn't use it. And Joshua may make comment about the fact that actually we do have a tie-up with Bolero, but I'll let him make that announcement, or have I done that already? But the blockchain talk that we have, it is probably more what you're referring to, but that information has always existed. None of that is new. The problem we will have is, it's fine if you're doing a trade of copper cathodes coming out of a Hamburg warehouse into Edinburgh. Everybody's digitized and ready for that and the press of the button, and therefore willing to accept it. The problem you have is, we've seen very recently, for example, I'd go back to the copper, for example, it is what happened in Istanbul, and just dust that was there. So what do you do on that blockchain aspect when the person inputting the information is already putting incorrect information? So how can you continue to rely upon that? That's something we have to overcome in some shape or form. Within the Mitigram platform, obviously, as it has got a harmonious aspect in regards to the efficiency of streamlining and work hours, because your vanilla business is on the platform. So you're not having a separate spreadsheet, you're not having a separate email, you haven't got separate communications by phone. That's where it's important, because that's what you can rely upon. If you have to start relying upon third-party information, you have to look at it very carefully, where the input of that information is accurate.
It's interesting. I mean, you mentioned the copper dust. I also think about painted copper, painted rocks to look up at copper. Is the digital process the panacea for all the ills that impact trade finance? I mean, you Liberty, Phoenix, Agri Commodities, and then going back, Enron.
No, is a simple answer.
Okay.
We still need human beings there to kick the tires, to confirm what it is that we finance, to confirm what it is that we're processing. And those examples you've given are perfect examples of that. But what you do have is a sort of build up where, John, Joshua, and myself have got years of experience with this, where you get approached by people who say, oh, it must be fine because so many other people are doing it. Then you have the SME market, which is so devoid of finance at this present time, whereas you can actually take, the direct instrument as your security. So there seems to be the human nature aspect of enjoying going with the lemmings off the cliff. And that's where you've had Greensill, that's where you've had Enron in the past, and we can probably name quite a few others. The part I'm disappointed with is that where the growth should be is in that SME market. And that's where the digital platform will help those businesses, because the person exporting coffee, cocoa, sesame out of Benin or Nigeria or Ivory Coast is the person who can make greater use of that digital process and have access across banks in the Middle East, in China, in London. That's where I think it can make its biggest inroads.
And I think actually just jumping in there, Pepi, I would say that, financial institutions have to be really, really careful about digitization to the extent where they see it as a way of replacing human endeavor and what I call the experienced people with the smell test of a transaction. We've already seen over the last 15 or 20 years, in a race to cut costs, banks have got rid of their experienced and knowledgeable staff in a race to keep costs as low as possible because of capital requirements increases. We talked about Basel III. And unfortunately, you cannot replace common sense with a digital platform. You need both, but the trouble is, I suspect that if we're not careful, employers will say, well, we can substitute experience and knowledge for digitization. So I think, we've got to be really, really careful. We've already seen a lot of all these frauds we're seeing are the same old thing happening time and time again, where, people with common sense and history would say, this isn't just right, it's wrong.
Yeah.
Just a quick point on some of this. You asked, Katharine, is it a panacea? No, and the answers from both John and Pepi describe exactly no, it's not. And banks still prefer to deal with clients that they've known a long time, because that's the best way of avoiding the frauds and the big operational disasters that happen. But then the other thing that you said was a reluctance of business to grasp digitalisation or digitization. And, I think that there possibly is, but it's not about the reluctance to look at new technology, something that, for instance, Mitigram produces. They like it, they get it, they understand it, and very often they want it. But the next stage in that acquisition process moves into internal stakeholders. And a lot of those internal stakeholders are familiar with technology and are familiar with legacies that they've had that perhaps haven't been good experiences. Now, I could name to you off the top of my head 4 very large banks that are currently struggling with implementations of very large back office trade finance systems that they spend millions of dollars on, systems that then also need to integrate into their technology ecosystems, which they think they're going to do in 9 months, and 2 years later they're still struggling with. Now, with that as a background, when the business comes to them and says, I've got this great piece of technology, I really want it, they can get it up and running in 5 minutes. The other internal stakeholders say, well, we're sort of a bit tied up at the moment, come back in another year. And so I don't think there's reluctance of business to acquire. Just within these organizations, there is a legacy and a backlog of old tech that they're having to deal with before they can consider the new tech. And, I'm hoping that that goes away over time, but possibly it's with us for several years still to come.
Just gives us a good point to actually launch what's going to be exciting you most, what would help your clients most in their journey to digitise trade, as a sort of a final thoughts from you, Joshua.
Well, to me, and I say it pretty much on every webinar I'm on, it's all about the data. This, we're making data accessible in a way that it's never been accessible before. And, whether you use the data to improve efficiencies of workflow, whether you use the data to make better decisions, it's all about the data. How do you reach in to this previously difficult to understand and navigate box of tricks and pull out stuff that can improve your business? That's why we've developed what we've developed: workflow efficiencies, analytics, and ongoing abilities to connect with new counterparties and so on. I mean, it's all about the data.
Excellent. John, words to you. All about the data. How excited are you?
All about the data and the analytics, and actually going forward, it's about the authenticity of value documents, i.e. documents of title and financial documents. AI could provide a great role in that, but of course, we have a geography, a global geography, where you have development in OECD countries, and where you take emerging market countries, it's just not going to happen for a significant period of time. So it's going to be a difficult span, and I think it's a bit like watching Star Trek. We don't want to bite off too much of the future because we're not quite there yet.
Star Trek's still going, so I like that one. Pepi, Star Trek, not too much of the future, but
for me, I think the exciting part is very simple. It's the way the digital processes are going to help improve the understanding of local networks, bringing the smaller banks more into focus, and how they can work to support local businesses, and then how that expands out into the international markets. Because remember, there's only a finite amount of money in those local institutions. So we need the big banks to step up, use those digital processes, and help the economies at that very local level with the information that the digital system gives you.
Great. Well, thank you very much indeed, gentlemen. It's been very interesting discussion, and I'm sure we're going to carry on talking about building resilience in a post-Brexit environment for the next 10 years at least. Thank you.
Absolutely. Yes, at least,
Thank you,
Katharine.
Katharine.
Pleasure to meet you as well, and thank you. Yes.
Thanks very much, Katharine.